And the first one I want to look at is Apple. It was, or it is in fact, the Apple Macworld exhibition this week. If you're an Apple fan, you'll know what I'm talking about. If you're not, well, this is the biggest Apple show of the year. And yesterday, on Tuesday, the 6th of January, the Apple keynote presentation took place, which is traditionally where Apple launch some fairly major new products. The iPhone obviously was launched a couple of years back at one of these, or a year back, however long it was. And so industry watches this, and of course the markets watch this Macworld keynote. And as you can see on this chart, the stock price sort of bumped along until pretty much the end of the presentation, and then it dropped off a cliff. Presumably the markets were expecting some more stuff to be announced than what actually was announced, although weren't happy about some of the announcements, like the iTunes store going DRM free, that kind of thing, reducing prices in the iTunes store as well. To be honest, doesn't really matter what the interpretation is. The effect here is that news affects stock prices. And this brings us nicely back to what I was talking about in the last video in this series, when I talked about trading stocks versus trading Forex or futures, and the whole universe of stocks, plenty to choose from, and there's always something moving. And of course what moves stocks is news, because stocks are based on companies. Obviously they are shares in companies, and according to how well or badly a company is doing, you'll be able to see the price of that company move up and down, its stock price. Now, if we know that something has been announced about a particular company, or there is news on a company, then it's fairly safe that that stock price is going to move, and the bigger the news, the more that's going to move the price. So this is how I go about choosing what stocks out of the thousands and thousands that are available I'm going to watch on any particular day. Now, yesterday was a no-brainer because Macworld is a huge event, happens every year, and it always has a big effect on Apple's stock price. So Apple was an easy stock to pick out and to trade. And as you can see, that fell off a cliff about 1 o'clock in the afternoon, and that was a nice, easy, predictable trade. You can obviously you can make money from stocks if they go up or down, and if you don't know yet about making money from stock prices that are dropping, then I will cover that in a different video because it's a bit too involved to get into here. So that was Apple. Let's have a look at another example of using news to trade stocks. This is news that was released yesterday morning on Logitech. Logitech scraps fiscal 2009 guidance to cut jobs, and that was at 7:53 in the morning yesterday. So what that's saying is that Logitech have decided that they're obviously not going to meet the 2009 financial objectives they set themselves. So that's Logitech basically saying that they're a hoper or a no-hoper rather than a doer for 2009, and they're going to cut some jobs. So probably seen as bad news. And what effect did that have on Logitech's price is the chart, and you can see that that fell off a cliff pretty much as well. Although in the afternoon it did go up nicely and start to recover a bit. So a couple of very easy trades there. In fact, early on in the morning, just after 10 o'clock, as that dropped off, that was a nice short trade for at least 50 cents a share on that one. So trading 1,000 shares, $500 on that. And actually, if you stuck around, you could have traded around just after midday, 1 o'clock. You could have picked that up again, gone long, and picked up probably another 50 cents or so, another $500 on 1,000 shares, as that crept slowly back up in the afternoon. So again, the lesson here is that news is what moves stock prices. Pick the right news, you'll pick the right stocks, and you'll find easy trades. And if you remember back to the last video, that's what we're looking for, easy trades rather than difficult charts that just go sideways. So let's have a look at one more. YRCW This was the news story: YRC Worldwide upgraded by Wachovia, which is an investment bank, and that's basically saying that the investment bank is watching this company has upgraded their guidance on that stock, which basically just means they've issued a note saying to their investors that they recommend that investors want to buy this stock rather than sell it. That was yesterday morning, and if we have a look at the effect on the price, you can see that that bumped the price up quite nicely. Settled back a bit in the afternoon and off it went sideways. But if you were trading that yesterday morning, if you were watching that stock, that would have given a nice easy trade again. There was a pretty easy 50 cents or so in that one, so another $500 trading 1,000 shares of that stock. There we go. So I hope you can see that picking easy trades actually isn't that difficult. You've got a universe of thousands of stocks, and you can tell which of those stocks are likely to move because they move for specific reasons, notably that there is some kind of news on that stock. So if you find the right news, you'll find the right stocks. Find the right stocks, you'll see easy trades, and that's half the battle won. Then you can with an easy chart like that, you don't need a particularly precise or perfect system to trade it. Even an imperfect or very imprecise system, catch a little bit of that move and it's money in the bank. Okay, hope that was useful. Do keep feedback coming. It's been good feedback so far. Seems that this new format of videos is going down quite well, so pleased about that. And now that the holiday season is out of the way, should have another one for you much sooner. Alright, catch you soon.